A lot seemed to occur today in markets, so let's break it down, but more importantly, project where we're going from here and how to position going forward. So first and most important, we'll get to the oil crash in a second. But first and most important, I think, is Russia-Ukraine. Obviously, this has been dictating the market headlines for some time. We've had our opinions on it. You can go to past videos to get more in-depth Russia-Ukraine analysis. But our bottom line, our understanding, and it's our understanding now because we've hired somebody for the firm, a Eurasian geopolitical analyst, my friend since middle school, Hunter Stern, who's very passionate about Russian culture and political philosophy. We have been under the impression this entire conflict was completely avoidable by, before anything occurred, making a clear stand that NATO will not expand to Ukraine. Unfortunately, the opposite of that had been happening for much of this conflict. And in the last few days, we've seen very clear signs that things may begin to resolve. We've obviously seen some more hostile signs, but it's good to see that they're not all hostile signs. Yesterday, we saw Zelensky say, we'll take NATO off the table. We had also seen yesterday that the United States was going to provide Poland with new planes, and Poland was going to send those planes to Ukraine. Obviously, the White House seems to be getting the memo now that that is unacceptable and is basically NATO without the NATO term. So the White House today is now taking that off the table. They're not trying to make that happen. And that's an optimistic sign. We get NATO expansion realized as the main point of contention in this conflict. And then we get drawing back of previous claims and previous attempts that many were trying to make. And all of a sudden, maybe we can start heading in a more diplomatic path. I don't think it's going to be so easy because obviously the West has been so aggressive in this stance, and that has forced Russia to continue to knock up their pressure. So we'll still have to see what happens. But I'm now becoming optimistic that we are on the right path. Obviously, I'm not taking off the table that this is a highly uncertain situation and a highly uncertain environment with regards to Russia-Ukraine. But at least maybe now people are starting to get the memo on what this is all about and are actually playing by that memo, because I think we can get a fair conclusion and live in a peaceful multipolar world rather than going back to American globalism and world domination and all this, this regime change, government building. Let's get out of that game. Russia doesn't want us in that game. We'll see what happens from here. So that's Russia-Ukraine. Somewhat optimistic. We're seeing that in the market. Obviously, an oil crash today. Now, if you go to yesterday's video and the video before, we had taken a significant chunk of our energy position off the table for fear of something like this. What caused the crash today? Apparently, there's some progress with the UAE about expanding oil production. Venezuela releasing 2 U.S. prisoners. Possibly they're going to come online. They can expand their capacity by about 3 million barrels, which is almost all Russian production. So you get those two, you get plenty. Iran and Saudi Arabia seem to be pouring a little bit of cold water on OPEC stuff. So we'll see what happens with that. But Venezuela seems more than happy to increase their production. So there might be more production coming on. And we said yesterday, the cure for high oil prices is higher oil prices. However, I think the days of $40, $60 a barrel oil are gone. I don't think anybody wants to go back to that. That was really the case because U.S. producers were picking up their production so much, and they were incentivized to do so. Their compensation structures were based on, the executives of the company, their compensation structures were based on total production and just growing and expanding production. That's no longer the case. Their compensation structures are now profitability, returning cash flow to shareholders, and overall capital discipline. So they're investing in new production. Prices are super high. They should. But I don't expect, a race to the bottom, a perfectly competitive market, the things we had seen in the past. It doesn't seem to be the case. OPEC seems to have some strength to it. U.S. producers seem to have some capital discipline to them and will likely have an elevated price. However, I'm not getting fearful in energy stocks. Yes, I took some off the table, but I'm not selling any today. I'm not selling any in fear of dramatic selling. I'm not fearful of a major reversal in this market. One, because we don't have total optimism in terms of production numbers. Two, energy stocks have actually lagged the rise in WTI. I think it's been a relative consensus in the market that this run, at least by high-level energy market participants and analysts, and those were the ones who really got in ahead of this trade, it was never the assumption that we were going to be able to maintain these prices and get higher. At least there was a hesitation for that, and we wanted to see how the reactions were going to occur. What was going to happen? There had to be a response to this kind of move, and it seems like that response is starting to gain some momentum. So we underperformed relative to WTI on the upside, and today we're outperforming relative to WTI on the downside. So I'm not fearful over a massive contraction. At the price previous to this recent Russia spike, $80, $90 a barrel, we were still relatively cheap in terms of cash flow. Exxon was making tremendous money relative to its price and earnings multiple. So we expect that to continue and for them to have a fantastic quarter this quarter. Price at the pump is up. That multiple is going to contract, all else equal, but maybe there's a little more price appreciation. So last couple weeks been quite strange. Next couple weeks might be quite strange again, but this is a longer-term play. This is a longer-term energy play. Before the Russia-Ukraine tension, we were in a structural supply-demand deficit. That got exacerbated. That extra exacerbation might decrease, but I don't see us getting to a massive oil surplus. I expect us to remain in some sort of supply-demand imbalance for some time to come. Obviously, renewables are picked up. Energy companies don't want to get too ahead of themselves in terms of production. So nothing crazy I expect to happen on the downside. Maybe we get a pullback, get some of that air out of that bubble. It seems like it could have been a quick little pop bubble. And that's okay. We can allow that to happen. It still seems to me like energy stocks are good stocks. Maybe not in the next week. Maybe not in the next 2 weeks. Yeah, I wouldn't, have wanted to buy yesterday. I sold yesterday. So all understandable there. I hope this is understandable. And if you have any questions, feel free to drop them in the chat. We're going to respond to each and every question at this size in our channel. Hopefully it gets bigger, but it's big enough now, and I'm happy to have all of you guys watching. So that's today's video. Broader market. We'll get to one more thing, broader market. Yes, it's nice to see a rally here. And there are certainly stocks that are cheap. I have bought a lot of stocks the past couple of days. Not as much today. Earlier this week, we talked about adding Boeing. I did buy a little bit more Boeing today. Bought some Barrick Gold today. That was it. Barrick Gold on the dip. That was it. Did a lot of buying yesterday. Did a lot of buying the day before and the day before. And I'm somewhat cautious on the broad market. I have the SPY puts, but I definitely have positions I still like, and I'm happy to continue to hold those. So we'll see what happens. The fear around the broad market is raising rates, and not everyone's focusing on that now. Russia-Ukraine has taken the whole picture, but we've had massive bond buying by the Fed. And I'm not necessarily concerned about them hiking rates. I'm not necessarily concerned about the federal funds rate increasing, but I am very conscious of the fact that the biggest bond market participant, which has been competing to purchase bonds and keeping that price artificially low, is going to be exiting that market at what has been flirted at by members of the Fed as being as quick as that accommodation was added. Everyone's focused on the federal funds rate. In my opinion, what matters more is the actual asset purchases, because they're either going to sell assets or let them just simply run off, but they're not going to be buying them. So you're going to lose the biggest buyer in the bond market, and all of a sudden, there's going to be less buying for bonds, and we're going to get a hot inflation read tomorrow. There's already hints of that coming out of the White House. You're going to have to re-rate that market. Fed's talking March 16th. That's a week from today. We'll see what happens there. I think Russia-Ukraine kind of begins to fade over the next couple days and weeks. The focus returns to the Fed. The Fed controls markets. And if they're getting tight, it's certainly something to consider. Doesn't mean we can't own stocks. We can own well-priced, well-chosen stocks. But we have to remember the Fed is coming. And that is the more longer-term issue, in my opinion, because I think Russia-Ukraine, after today, is going to be resolved. We thought it was going to be a fast situation for some time. You can go back to previous videos and get that full analysis on Russia-Ukraine. But the Fed is really the market-controlling thing. We've been hearing about all these companies leaving Russia. 1% exposure in terms of revenue, not very much. No real impact on the market. Obviously commodity prices, but we're seeing what's happening there. So that's today's video. And until next time, peace out.